Welcome to the Titans of Industry weekly interview. As we're recording this, the major indices are at monthly lows as earnings seasons shows the real picture in the real economy. And I'm thrilled to have with me today Chris Martenson, who is an economic researcher and a futurist specializing in energy resource depletion and co-founder of peakprosperity.com, as one of the early econo-bloggers who forecasted the housing market collapse and the stock market corrections year in advance. He rose to prominence. If you haven't seen the video seminar, the crash course, it's brilliant. And the book he published later on. Chris's insights are in high demand in the media, as well as academic, civic, and private organizations around the world, including institutions such as the UN, the UK House of Commons, and the US state legislators. Chris, I'm happy that you're with us. How are you doing today?
Well, I'm doing great today. It's good to be with you.
Perfect. Chris, I want to talk inflation, deflation first. Back in 2008, the entire banking system collapsed due to the credit crunch. But honestly, it was a lack of trust between the banks that stopped intraday bank loans, and liquidity stopped. And we're seeing in the last few days a real spike in intraday loans. So what's going on now? Banks have a lot of cash on hand. So this is definitely different than 2008. But money velocity in the real economy is very slow. It looks like there's a double threat here. What's your take on this?
Well, there are just so many cross currents going on right now. But listen, this is what happens when the balance sheets of the major central banks of the world have ballooned to the levels they have, with over about 40% of world GDP now on the books. It's just an astonishing amount, and 26 some odd trillion like that. It's just an amazing amount. All that money had to go somewhere, so it's out there distorting things. Everybody is perfectly feel okay about being confused because nothing makes sense anymore. I mean, how do you make sense of Italian 10-year debt trading with a lower yield than U.S. 10-year debt? How do you make sense of companies issuing debt in Europe with negative yields? Are nonsense, and so of course they distort everything. But you're pointing to this idea that the LIBOR rate has started to climb. There's some technical reasons for that because of how money markets have to now balance their accounts, and they're out of sovereign debt and corporate debt, and they're into treasuries and things like that. So it's distorting everything. So my view at this point is that we have a faith-based economy. And you mentioned what happened when that faith goes away, where institutions can't trust each other. We called that 2008 pretty ugly. And the institutions had liquidity, but they didn't want to share it with each other because they didn't know who was solvent, who was insolvent. You need that kind of trust to have this system work, because it is somewhat faith-based. And so that part is getting a little dodgy at this point, and we're seeing a loss of faith in some really systemically important institutions. Deutsche Bank is the top of everybody's list, but I could point to 6 more in Europe whose stock prices indicate an equivalent level of difficulty at this point. So yeah, faith is a little bit on the wane, but I think that shouldn't be too surprising to anybody who's been paying attention.
Let me ask you a follow-up question to that. Election time in the U.S. Who would be the worst in facilitating and maintaining the trust in the institutional side, for the Fed and for the large sovereign wealth funds around the world, China, etc. Who can create chaos faster if elected, and how do you see this play out?
Well, if I got elected, I would be the worst, but no chance of that, right? because I would absolutely want reality to return to this situation as soon as possible. Listen, in the United States, we don't have any good choices. I don't take any particular positions on all of this, except to say that I think they're equally bad choices at this point. If you're narrowing it down and asking who is the banking system going to have more faith in, that's hands down. They have more faith in Hillary Clinton. They've backed her with money and by deed. So it's pretty clear that that's what the system wants. It's not clear that even if the system gets that, it's going to help all that much for all that much longer. So look, I think that you can distort markets for a very long time, as long as things are trending in your direction. But there's some things that aren't trending in the right direction. This is a very long, air quotes here, recovery, not a great recovery, as people know. It's been a statistical recovery. It's been a mirage recovery in corporate earnings per share. But when you look at top line revenues, when you look at earnings erosion over the past 6 quarters, when you look at global trade balances now, when you look at the fact that China just reported both on a dollar adjusted basis, imports and exports down. You look at Japan just hemorrhaging constantly on a monthly and quarterly basis. These are all signs that we have at best a very weak global economy. Everything is priced for perfection. So that's the tension that's rising right now. And the markets are being elevated, let me be clear, on the basis of speculation on what central banks are going to do next. That's not investing. And on an investing basis, there's lots of reasons to be cautious. But, my main caution is that I think regardless of who gets in as president on this cycle, that we're not that far away from a faith-based crisis in the global financial system.
Okay, so let's talk about this. You said that you can distort market for long, and it has been distorted for long. But there's a limit to that, as you said, and I think that part of this limit has to do with demographics, the baby boomer demographics in the U.S. For instance, our research clearly shows that the U.S. boomers are retiring in such a rapid pace. It's just not possible for the U.S. government to meet the Medicare, Medicaid, and Social Security obligations. And obviously, you're going to see, whichever president gets elected, you're going to see major infrastructure projects being advanced so to create, a more robust economy and lower unemployment rates, and just show that something's happening on the government side to create more money velocity. What's the end game here? The tax receipts obviously can't meet these obligations, and you can keep printing, but somebody has to be on this receiving side buying all this newly created currency. There's no end in sight. What do you see here?
Well, let's see if we can simplify this. There are a couple of key points in there. The first is that an economy it really should be in service to the people, right? And when we let's look at Japan very quickly, and then I'll jump from Japan to help illustrate what I think is happening in the United States, if that's the focus. But Europe has the same demographic issues. The United States, Japan happens to be in front of everybody by about 10 years demographically. So in 2008, Japan's population peaked, and it's been going down ever since. So they actually are, on a net aggregate basis, have fewer and fewer people. Secondarily, the people they do have are aging rapidly. So that when you look at the number of workers that are actually in Japan compared to times past, that number is falling really rapidly. So you would think that if the economy was in service to the people of Japan and not the other way around, you would say, okay, I can make a strong case for having a shrinking economy. Because A, I have less people, and B, they're older, and older people have fewer need for consumption and other discretionary items. But that's not what we're seeing. We're seeing the Japanese government and banking system and central bank doing everything they can to ignite as much growth as they possibly can. Not because the people need it, but fundamentally because the banking system, if they don't have that growth in credit, banking systems get really tippy and even threaten collapse. That's 2008. So we come to the United States, sure, 10,000 people a day retiring. The boomers are retiring. The boomers had a number of things going for them demographically. First, they were a large, healthy cohort. They came along at a time when we had plenty of abundant, cheap energy. They had an internet revolution as a tailwind. All of these things conspired to give the boomers a large and growing sense of wealth and entitlement that came along with that. So they granted to themselves lots of things at the state, municipal, and also government, federal government level in terms of pensions, endowments, entitlements, other things like that, Social Security, Medicare, Medicaid. Lots of giveaways, always easy to do in an expanding environment. Well, 2000 happens, then 2007 happens. We've been mired in low growth in the United States, but globally, I can make a strong argument that global growth is gone for a long time, if not forever, until we have a big reset. Without that growth and without inflation, the entitlement programs cannot be met. And that's just as true in Japan as it is in the United States, as it is in Europe. And this is just simple math, and people have known about this for a long time. These can't be met. So if you can't meet the obligations, your choices include defaulting on those obligations, saying, sorry, can't pay your retirement, or 2, raising taxes or input fees on people who are continuing to work so that you can continue to fund that Ponzi scheme along a little further, or some combination of the two. You have to ask for more and cut what you're giving. Both, I think we're going to see a combination of those things happening. But right now, when I am talking to people who are nearing retirement or counting on a pension, I'm telling them to take their expectations of what they're going to get and cut them in half as a starting point over the long haul. Because I think that's kind of in line with what the math says at this point in time. The only thing that would change that would be a very, very rapid resumption of growth. Hey, haven't seen it. And it's not going to happen. Can we just be honest? It's not going to happen with debt levels as high as they are. The history books are clear on that. And then the third thing I add to that story always is that when global growth does come back or tries to, it's going to run headlong into an oil problem that's going to create very high oil prices that will then very much limit the growth rates. So you add it all up, and I just say, look, the best comment I heard about this, I was given a talk, and John Malden was also given a talk, and he stood up and he said, people ask me if I worry about the Social Security system, and my answer is no, I don't worry about it. It won't be paid, so nothing to worry about.
Well, let me ask you this. You bring up this point about the boomers, and we've all, I've read countless books and heard countless people say, hey, these obligations can either be inflated or they can be not paid, or maybe postponing the retirement age to 72, 77. But obviously that's not going to cut it as well. The math is just not adding up. But I want to ask you this. When they realize that they can't actually get what they want, they have assets. Boomers are the richest generation on the planet. When they start selling, with the younger generations being poor and indebted, who will buy these securities and real estate holdings now owned by the boomers? What will happen to asset prices when there's no supply of buyers?
Well, you've asked the most important question. It's usually overlooked. Yes, having a bunch of wealth, again, air quotes, wealth, is meaningless unless you can transform it into something. So if I have a house that's worth $1 million and I have a portfolio that's worth $1 million, no, they're worth whatever I can sell them for. And so the issue with what the boomers have done, it's been very short-sighted, and I'm in the boomer generation, so I'm casting aspersions on myself. But the boomer generation, horribly short-sighted, and has forgotten about this idea that for every buyer there needs to be a seller. The people coming in behind them, Gen X and millennials, they have gotten a pretty raw deal overall. We see things like $1 trillion in student debt, the only non-dischargeable source of student debt, so they're carrying that. As well, the boomers that are currently housed in the Federal Reserve jammed interest rates to zero. Now, what happens when you do that? Well, you help some people, you punish others. The Federal Reserve is the largest distributive organization on the planet. They distribute from one group and take away from one and give to another. So who'd they take from? Well, savers, right? So people who used to get 4 or 5% on a passbook savings account now get zero. So what happened to that 4 or 5% they used to get? Where'd that go? Well, that got transferred to the balance sheets and the income statements of big banks and other heavy borrowers and the U.S. government. So what happens when all these people who used to get all this money, $1 trillion, I think now, is missing out of interest payments that have been lost on these savings accounts? That $1 trillion would have been used, because that would have gone to parents and grandparents, would have been used to help Gen X, Gen Y, and millennials start new businesses. So what do we see? We see horrible business formation numbers because the young people are saddled with student debt and they're missing all this money that would have Some of it would have gone into business formation that's gone. And then the third and final insult was the Federal Reserve said, we're going to rescue the housing market, because if we have houses are more expensive, if people's houses are worth more, they will feel like spending more. Well, full stop, time out. The only people you help, and again, air quotes, when you do that is you help people who were underwater on their mortgage, who were thinking they're going to sell. That is, you're helping existing homeowners. But for first-time buyers, priced out of the market. So now let's get to the final end of your question. Like, well, who are the boomers going to sell to? They're going to try and sell houses that are way too expensive and stocks and bonds that are the most expensive they've ever been in all of history. To who? Well, the most over-indebted generation in history because of circumstances, and the one that has the least amount of private capital formation because of a real failure to start their own entrepreneurial businesses. So they're really, the question is very appropriate. Who are the boomers going to sell to? Well, if all of them start trying to sell at one time, they're going to discover there aren't enough buyers in this story. When there are more sellers than buyers, prices fall. So the alleged wealth of the boomer generation is fictitious in the sense that it's on paper and it doesn't actually count until you actually sell it and take those funds and redeploy them.
Yeah, and you know what I'm seeing is the Chinese, the Indians, the Indonesians, the North Koreans, they have such a young demographics and such a booming middle class that they would come in and buy these securities and real estate holdings. You might see a real transfer of wealth from the West to the East. In the next 20, 30 years, they could own, much more of the real estate in the U.S. and much more of the companies and publicly traded and private companies in the U.S. and Europe.
Well, absolutely. So, I was just in China a week ago, and first time, and it was wonderful to visit with the people there. Very entrepreneurial, very much interested in business and deals, and they save a ton of money. And they also have a lot of productive enterprises over there. So they're accumulating capital at a really fast clip. We've all heard the stories about how Chinese, or more generally Asian money, has been coming into key real estate markets like Northern California, Vancouver, Toronto, London. Yes, these people from the East, they're very industrious, and they are not saddled with the same sorts of situations that people are in the United States. And one of the more interesting things I heard over there is because they're two generations deep into the one-child policy. So I was asking a question. My question was, how are these people affording these houses in Shenzhen or Beijing, which are 20 times median income? I mean, that's hard, right? A $50,000 a year salary going out and buying $1 million property, right? That's tricky. So how does that happen? And they said, well, very large down payments, because now that we're two generations deep into the one-child policy, you have what's called 4-2-1. You have 4 grandparents, you have 2 parents, and you still have 1 child. And the way that works was, how does that work? Well, the 4 grandparents, each of those 2 grandparent sets they each had 1 child, and that became the 2 parents. And then those 2 people had 1 child, that became the 1. So there's a lot of money that's available from a high savings rate society when you have a 4-2-1 structure, and they're helping the 1 buy their house and pour the money in. And that's happening because they have that structure, and because people over there don't trust their stock market. And you can't buy land. All the land, 100% in China, is owned by the government. So you can buy a property that's built on leased land. And so that's really where the heavy amount of that funding has been concentrated. But for the Chinese who have the capability, they get whatever money they can out of country, and the state-owned enterprises are doing the same thing, and they're buying real productive enterprises. They're buying whatever businesses they're allowed to buy. They're particularly buying a lot of resource companies, oil, you name it. They're out there with their magic checkbook buying like crazy. So those capital flows are a big part of the story right now. In my view, those capital flows are supported by wild, crazy central bank policies. Those have to come to an end at some point. That's when everything changes pretty radically. So it's the reason I do shows like this one, and why I do what I do. I just think if people don't have the context, if they don't understand these large moving pieces, the little stuff doesn't make any sense at all.
Chris, I want to ask you this. You're a futurist, and we've been through so many pessimistic times in history. We've had two world wars in the past century. We've had famines, flus, you name it. The human race gets through these times, it blasts through these times. And I want to ask you about some of the optimistic forecasts you have about the future. Where do you see, there's so many great things going on to get excited about. What do you see that gets you real fired up? And where do you see, where do you see us in 10 years, 10 to 15 years?
So this is a story that varies by location. I have tremendous respect and hope for certain regions of the world. Here's the thing. We don't actually need any new technologies, but there's some exciting ones we could talk about. No question. Very exciting, fun. But we don't need any new ones. What we need is a different story. Now look, we're humans. And we've had written word for 5,000 years. We've had iPhones for 10 years, right? We grew up and were evolved with stories around the campfire, and the narrative drives us. This is an incredibly exciting, also challenging period of time where our main stories are changing. And here's one of them. Growth is good. All we need is growth. Any problems we have, we can solve it with growth. We're having a little problem with the entitlement. No problem if we could just get more growth. The growth story is now 10 years in the rearview mirror. It's taking a long time for it to break down, but people are finally starting to get it and say, oh, growth is good while you have unlimited resources, essentially. But as soon as you run into any limits at all, growth works against you. And any city planner will understand this concept. But we're seeing limits in how many fish are in the ocean and how much water is underground and how much farmland there actually is or how much oil is in the ground. So those create some of the challenges in the story, but they create the other side. They create the opportunities in this story. So what I'm very excited about is to change the story. And if we could just flip that story from growth is good and all we have to do is grow infinitely forever to something else, then we get to start to settle in as a mature species on this planet and start doing things really differently. And what I'm excited by is watching people begin to do things really differently. And so there's lots of ways that technology is going to help us do things really efficiently. I hope that my grandchildren don't believe me when I tell them about traffic jams, because we no longer have traffic jams, partly because we have a lot of self-driving cars, and we've got they can work out the circumstances of how the traffic flow works, and they seamlessly integrate when places where lanes have to get narrowed down, and they don't ever press the brake inappropriately, right? So these sorts of things could be great. But where we don't really need any more technology is in the area of how to be more efficient, how to build a house that's the right size for people, that's not 3 times larger than a human needs, or where we're using latest efficient technologies, or even just putting the appropriate amount of insulation in there. These are all things we can do, but first we have to understand that we need to, and that's starting to change. I love seeing that. And I love seeing how there's young people now who are farming in small micro farms in ways that's pulling massive amounts of carbon out of the atmosphere, building huge amounts of topsoil in ways that the plants are so healthy. There's no need for herbicides, for pesticides, not even so-called organic pesticides, because the plants are so healthy, the bugs just never get a foothold. And so really the big switch here, the thing I'm hopeful about is that the old way we did things, we had extractive and isolating institutions, political, economic, educational, extractive and isolating. And we're moving into these new sets of ways of organizing ourselves, which are more relational and more regenerative. And the more I see those things happening, the more hope I get, the more encouragement I get, the more I understand where we're really going, which technologies are going to map into that, which are really helping us. And there's a ton of things out there that are just absolutely fantastically exciting. And just to mention one of them, virtual reality is going to fundamentally change and disrupt 1,000 things, from business meetings to the need to travel to the level of empathy and connection people can have by being able to virtually walk through a refugee camp, for instance, or to visit a place where something's just been clear cut, or just to increase people's understanding and connection to what's really happening, both with humans and the natural world. That's something that as humans we're wired for nearness and recency. And so if virtual reality stands the chance of bringing the world into our living room, in essence, and connecting us to it in new ways, if we can't hop on a jet and travel halfway around the world. So there's extraordinary things happening, but we won't get there to that happy future if we don't have a clear understanding of exactly what's happening right now. And that's where, if people don't understand what's happening just with the energy story, they really need to get their hands around that, because that's possibly the biggest and least well understood story that's the most important at this time in history.
Well, Chris, could you expand on that, please?
Certainly. So my background, my PhD is in a biological science. And so I'm a biologist at heart, and I've studied living systems. And one of the things you learn quickly when you study living systems, whether it's plants or animals or humans, is that every organism grows into its available energy supply. And they tend to grow past it. And then they tend to suffer a population hit on the backside when they run out. Here's a couple of numbers for you. The first number is 22. Somebody who's 22 years old has been alive when half of all the oil ever burned in human history has been burned. And we're increasingly burning more and more of it, and it runs out someday. And the second number I have for you is 10. There are now 10 calories of fossil fuels embedded in every calorie of food that you or I or anybody listening to this eats. Up till about 100 years ago, farming returned 10 calories to us for every 1 calorie a farmer expended on it. Today, that number's been exactly flipped. It's never been upside down in all of human history, except for the past 100 years when fossil fuels came roaring onto the scene. In short, humans are an organism that found a really tasty, abundant source of energy, and we grew into it in terms of how we feed and organize and all of that stuff. We do not have a plan as a world yet for how we're going to navigate switching to a different energy source. And a lot of people think, oh, Elon Musk and wind farms, they need to study this a little better, because here's the story of humanity. We went off of wood onto coal. Why? Because coal's better. But it took us 50 years to sort of figure that out, from the 1810s to 1860s. And then oil was discovered. And oil's way better than coal, but it still took 60 years for oil to become half of that energy mix. Why did we move from coal to oil? Because it was more concentrated, more dense, more tasty, right? And then we discovered natural gas and how to really utilize that. And we're in the process of really moving into that energy source. When we move to each one of those, we're moving from a less concentrated to a more concentrated energy source. Now, we think we're going to move to wind and solar. We're actually moving backwards on that curve. We're moving from a more dense to a much, much less dense, much more diffuse energy source. We've never done that before. Trust me, there are unappreciated challenges that come with that. The capital costs are going to be extraordinary and enormous. And we're going to have to be really focused and serious about it. We can't wait for market forces to deliver that to us, because market forces take 50 to 60 years if you're moving to a better energy source, for that energy source to become half of your mix. Well, the challenge before us is in the next 60 years, we have to move 100%, not half, 100% to alternatives. And it's going to be a challenge that people really don't appreciate yet. And by the way, everybody's job, the value of everybody's portfolio, stocks and bonds, all of the food that we eat, our military, everything is completely dependent on the same energy source that's going to be going away over the next, let's say, 20 to 60 years. So this is such a huge challenge. It's enormous. In the only country that I've been to that understands this and has a plan, or has proposed a plan for it, doesn't have one, proposed one, was China. Because they get it. The director of the national energy grid in China about 6 months ago announced to the world and said, we've studied this. We think the world needs to spend $50 trillion just on an electrical grid, so that we can put solar farms in the desert regions of the world, and we can put wind farms in the Arctic regions, and then we can create the massive infrastructure piping of pylons and electrical grid components to carry that energy to where it's needed. 50 trillion is basically more than 2/3 of the world GDP output. It means the entire world would have to stop everything it's doing for 2/3 of the year and just work on this one project. It's massive. It's enormous. There's no way market forces would ever do anything like that. And that's actually what needs to be done to address this problem in any realistic way, whether or not you care about climate change or you care about continued economic growth without disruption or you care about the idea that fossil fuels are limited in supply. This is the challenge before us. So this is something that people need to know about. It's really an important challenge because if we just sleepwalk into that, I think what happens is we get heavily disrupted. We have to choose between ugly things in the future we'd rather not have to choose between. Like, do I keep my house warm and cool or do we eat? Do we have a military or not? I mean, it's just like that, and so that's the challenge, is trying to wake people up to the reality of the actual numbers of this and getting away from the headlines which say there's, some exciting new battery just around the corner. They're always around the corner. In the absence of one actually arriving, we need a plan. Neither candidate in this election cycle in the U.S. has a plan. Hillary accidentally misstated one of the biggest flubs out there, which is that the United States is no longer dependent on Middle East oil because we're energy independent. Whoops, dead wrong. We import 7 million barrels a day. And Donald Trump came out and said the United States has 1,000 years of coal left. Whoops, dead wrong. Not even close. So when you have two candidates that think we're energy independent, we have thousands of years of stuff left, you're in deep doo-doo at this point in time because we don't. We're actually, if you look at it the right way, need to be on almost emergency footing at this point in time, because it's going to take decades to really revamp the energy structure of the United States so that the people who live here live, eat, work, and play in a geographically relevant and coherent manner. And that's a lot of redesigning. It's a really big challenge. And if we do it right, we get to live into a much better future. It's going to be awesome. Way better than people living 90 miles from where they work, stuck in 2-hour traffic jams every day. It'll be great, but only if we have the right story and we treat it like the priority it really should be.
Chris, this has been a really eye-opening interview. I mean, you've talked about so much, you've covered so much. I really want to thank you for being here. Could you tell people how they can check out your work? I mean, so many people are going to listen to this, will want to check out more from you.
Absolutely, love to. The website is peakprosperity.com, like mountain peak, P-E-A-K. And the work is, a lot of the work that I just sort of talked around is called The Crash Course. It's on video series online, very easy to Google up, and it's a book. And as well, that's sort of the problem problem definition, The Crash Course. And the other side is, what do you do? And then we have a book called Prosper, which talks about how to build various forms of capital in your own life so that you're happy, healthy, and having fun today, and also maybe more resilient for some of the challenges that might come.
Excellent, Chris. I really want to thank you for your time, and it's been a pleasure. Thank you, sir.
Pleasure's been all mine.
This was a sensational interview, especially for people who are really fascinated with economics and finance, and just have a general love for the future. Chris touches on the subject of inflation and deflation in our fiat monetary system, and I want you to realize that every investor needs crisis hedges. So make sure you download our series of 5 principles of investing success on our special reports page. Also, and very important, is the sudden creeping up of intraday bank interest rates, the LIBOR, which indicates fear among banks. This would be a good time to remember that your money isn't that safe in the banking system. Read our special report on central bank manipulation to get a handle on what's going on behind the scenes. Chris also mentions the unsustainability of the baby boomer generation's entitlement programs from the US government, and I suggest you subscribe to this channel and to our free letter, because we are focusing on this subject in October, November, and December, and actually creating a full scope documentary on this. As always, it's great to have you tuning in, as this information discussed here certainly doesn't reach the mainstream media, and it's up to you to seek out the best education in order to make good decisions for you and your family. See you next week.